As many people's summer breaks start wrapping up in the next few weeks, we wanted to check and see how consumers have been spending their money over the last few months and what it could tell us about the state of the economy. For more insight, let's welcome in Aron Levine, who is the Bank of America president of Preferred Banking here. Aron, great to have you with us. So, in the great battle of goods versus services over the summer, where are consumers leaning in and still spending?
Yeah, thanks, Brad. Great to be here. So our Bank of America Institute just put out a great report on the consumer. And I think the good news here and the headline is that the consumer is still strong. They are still spending. Credit and debit spend is up about 2.5% year over year and 40% over pre-pandemic. And to answer your question, the real spending is going on the service side, the entertainment side. So, of course, you've got the Paris Olympics, a lot of people visiting there. You've got Taylor Swift, concerts around Europe. So that's obviously a place people are spending. But even here domestically, restaurants, movie theaters, concerts, all those kinds of services and entertainment is really the bulk of where the spending is going right now.
It's so interesting, Aron. The earnings that we've heard over the course of this week, some of the major booking companies, whether that be Expedia or whether that be Airbnb as well, they are talking about some of these shrinking of lead times that they're seeing, last minute trips and growth in those last minute trips. What does that tell you about how judicious the consumer is being about the trips that they are taking?
Yeah. Look, I think the key is that the consumers still feel very good, and this is really tied to wage growth and unemployment. And despite a little bit of an uptick in the unemployment, a little bit of a slowing of the job growth, still people feel very confident in the jobs and in their wages. And so they're allowing themselves to say, hey, I do want to get away for the summer. I want to take that extra trip. And they're going ahead and booking it. So I think it's more the comfort level and the fact that there still is spending. I think another important data point, customers still have about 15% more in their deposit accounts than they did pre-pandemic. Now that's come down from about 40% more 24 months ago, but there's still a bit of cushion. So I think that's what's allowing that more spontaneous trip, people still feeling comfortable to go ahead and spend some money and enjoy themselves a little bit this summer.
Do you anticipate a surge in rewards utilization as consumers are looking for ways to offset some of the trips that they still are looking to take?
Yeah, rewards are such a critical component of spending and of card spending. Obviously, we have a great program called Preferred Rewards where we have 11 million customers that take advantage of it. And it's really critical because every dollar a client spends, they get some back. That takes the overall cost down a little bit. And that's a huge benefit. It also drives spending on restaurants and all the other entertainment stuff. So, rewards is a huge part of what kind of fuels spending and fuels people's comfort level in spending as they think about their budgets and knowing that they do get some money back with every dollar they spend.
Aron, Bank of America has seen 23% asset growth in both their Merrill Edge self-directed and Merrill guided investing platforms over the past year. What do you think are some of the reasons why clients have been investing at this high volume?
Yeah, so we're excited that the growth has continued really for the last 5, 6, 7 years. We're nearing our $500 billion mark here as part of the Merrill Edge platform. I think, again, the idea is that consumers are doing two things. While they are spending, they still are looking at how to invest for the future. And obviously, our client base is more on a long-term investment strategy, thinking about how to save for retirement, thinking about saving for their children's education, all the critical kind of life priorities as opposed to quick hits in and out of the market. So we see the investing that's coming in is going into thinking about more long-term planning, which is really how we try to help them and educate them on how to best think about investing over the long term.
Certainly. Just lastly, while we have you here, if you were to look at the historical kind of growth of active versus passive investment, where do you think we stand right now?
Yeah, I think that the key is many clients like to go self-directed and have a kind of their own personal active strategy, given the breadth of information education that's available. But growing is this use of digital advisors as well. And our Merrill Guide Investing is getting a lot of growth where that's portfolios that are identified and selective and is a bit more passive. So I think you really see a combination of both. And I think what's great for the typical investor now is the range of choices and that you have the ability to select, how do you want to invest? Do you want to do it yourself all the way up to, working with an advisor, and certainly in our business, our Merrill Lynch advisors, our private bank. So the choice is great, and clients will really choose depending on what they're looking to do and their time frame to kind of use different alternatives on how to invest.
Aron Levine, who is the Bank of America president of Preferred Banking. Aron, great to grab some time with you.
Appreciate it, Brad. Thanks very much.